I made $8,000 in just 4 days, and I'm going to show you the blueprint because this is something that you can follow to become an accomplished trader. So come over to my screen here, and I'm going to show you a stock, Duolingo. We all know the app, learning languages, learning math, learning all different things, etc. Look at this run that they went for. So recently, they were just getting abused, down, 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 down. I was looking at them to go short at some point. I ended up shorting them. And let me explain shorting real quick. Shorting is when you're betting against a company. So when you're looking to go long on a company or buy a stock, you want the stock price to go up. Now, in trading, you need to be a two-way trader. You need to be able to make money when the stock price is going up as well as when the stock price is going down. And arguably, you can make more money faster when a stock price falls. Why? Because stock prices fall faster than they go up. It's much easier for something to go down than it is to go up. So in this case, I was looking to go short. Now, I did make a little bit of money in here going short, but we had earnings that popped up. And earnings are something that I do not play with. You can have a great earnings report and the stock price can go down on you. You can have a terrible earnings report and the stock price can go up on you. It's a total crapshoot. So my big play here was to say, all right, after earnings passes, this is when I'm going to get involved with the stock. So I want to show you an example of how earnings can truly be a crapshoot. So if we come over to Elf, this is a beauty company. Look at this. The stock price fell about 10%, and it was down even further. It was probably down about 12, 13% that day. Now let's look at the earnings report, top and bottom line. They beat on top line earnings, they beat on revenue, and the stock price was down over 10%. This is why you cannot trade earnings. You will get burned. Some of them will work out in your favor. It's a 50-50 shot, but the majority of them will not over a long period of time, and this is what this is all about. So let's go back to Duolingo here, and we saw earnings came out, they beat on top and bottom line. They actually crushed on top line, beat on bottom line. Stock price ran up almost 30% at some point during the day. And then what happened? Well, it started to pull back down. Now, guys, I do not want you to copy what I'm doing. My goal is not for you to copy the trades that I'm making. My goal is for you to copy the process that I do. This is where you're going to really learn how to do this for yourself and make money over a long period of time. So I really want to drive that concept home. But if we look at this, we can say, well, why did it go up, call it 25%, and then pull all the way back down? What was the reason for that? Well, the reason is something called a flagpole. When you get a stock price that runs all the way up like this, it kind of looks like a flagpole. And if we just run something up and there's nothing to support it coming down, like a stairs, what I like to see with stocks is the stock price goes up and it pulls back, and it goes up and it pulls back, and it goes up and it pulls back. And here's something interesting that you're not going to hear from a lot of people. What I say, I said, you want to see stocks pull back. So I want to see my stock run up, and then I want to see it lose a little bit of money, give back some of the profits. And then I want to see it run up, and I want to see it lose a little bit of money. I want to see negative days. Why? Because when the stock price moves up and it begins to pull back, this is a new floor for it. So if we start getting this thing to creep comes down, it's going to hit this floor. And what's it going to do? It's going to bounce off that floor and it's going to start to go back up. Whereas you have a flagpole where the stock price just goes straight up. What goes up must come down, right? It's just as easy as that. There's no new stair. There's no new level of support. That's a very, very big thing. And this is something that I identified very quickly when it came to Duolingo. And I said, okay, well, as soon as I get the next engulfing candlestick, meaning the next buy signal, I'm going to execute a trade on it, and boom, I did. So got into this thing, and now we're starting to move down. It's only been a couple of days, and I've already made 8% on this trade. I make trades in lots of $100,000. So $8,000 in four days, that is equating to 8%. My trade is not over. I'm still in this. Those are not realized gains yet. But my point in saying this is, it's a pattern that I identified that is very simple to identify if you continuously look at charts over and over using the process that I've developed. And it's a very easy way to make money. But you have to stick to the process. If you start deviating, it's not going to work. So let's zoom out and see what kind of the rest of this trade looks like. Well, the rest of it, actually, before I go any further, I want to say something. We actually had a member in the community that said, he got into the trade yesterday, right here. A little bit of a mistake, newer member, and that's okay. We're all going to make mistakes. The comment that I didn't like, and that I had to teach him about or drive home, and maybe it was my fault that I wasn't driving it home enough, was he said, should I exit and just take my loss? And my comment was, well, why would you take your loss on this? The whole thing behind what I'm trying to teach here is do not trade just on price action. If you see a stock running up, way up there, don't just go buy it. If you get a stock that you buy down here and it goes the other, don't just react based on what the price is doing. You need to react based on what the overall trend is doing. The trend is your friend. If you trust the trend over a very long period of time, you're going to make money. Could he end up losing on this trade and it just doesn't work out? 100%. That's very, very realistic. But if you do this trade over and over and trust the trend, out of 100 trades, you're probably going to win on 60 plus. You need to be able to trust the trend. You cannot trade just on prices moving up and down. It's never going to work that way. And that's why people say that trading doesn't work. There needs to be more to it. So let's zoom out again and look at this and say, all right, where's this going from here? Well, we have a level of support in here, or resistance in this case, because we're going down, right? This is going to eventually come down to, I don't know, this to, let's see, is that 305 level? Let me see here. Yeah, 305. And then we're going to start moving down a little bit further to about 295. And then we're going to get to about 283. I think the trade will probably over at a maximum of 283. I'm not saying that it can get to 283, but if it gets to 283, it's not going to go much lower than that. If there's some miracle that happens and this thing drops, if it gets to this level here, because this was a big flagpole, if it gets to there, yeah, it'll come down here to, that was a terrible line, it'll come down here to like 225. I don't think that's going to happen in this case, but just the idea is let's look and see where the trade's going to go based on resistance points, based on support levels, based on the volume, and based on the overall trend, which is the most important thing. So I want to take you to another trade that I'm in. This is Abercrombie and Fitch. And for those of you wondering if Abercrombie is still in business, you had the same shock that I did when I found this chart. It is. And apparently it's flourishing. But what we're looking at here is Abercrombie, and it struggled for a very, very long time. And all of a sudden it started to creep into this sweet spot area where you have the highest probability to make money. This is the trend that I was talking about. You have to pay attention to the trend. Now, I ended up buying this thing right here. Let me change this to yellow. I ended up buying this thing right here. And it started to move up. Looked great, right? And then we started to get this pullback. And this is where people tend to lose money. They base their reaction off of price action. They're saying, okay, well, I bought this at, let's just call it 96.28, because I'm basically break even now, 96.28. And it ran up to somewhere around here, $105 a share. Yay, everything's going really well. And then what happened? Well, it pulled all the way back to 96.28. So you're saying, well, I should probably exit the stock, right? Well, no. What's the trend doing? The trend is still positive. This is my point about trusting the trend. This is going back to the Duolingo trade and the member of the community where he had that, he sold short and then it rebounded. You don't just sell based on the price going against you. These are called snapbacks. Snapbacks are a good thing. Snapbacks give you those stairs, those levels of support to build your way back up. That's the idea behind all of this. You need to become very, very confident in saying, okay, I am going to hold this thing until the trend tells me to sell. Are you going to lose? Yes, you can lose. But if you do the same trade over and over 100 times, you're probably going to win 60+% of the time. You're going to do very, very well over a long period of time. That's why I had to show you Abercrombie. So this is another one I'm in. I'm break even here. I was making a really nice trade. I should say that. I was really making really nice profit. It snapped back on me. And now I'm waiting for this to just break step, create that W formation, and start moving up. I'm waiting for these stairs. These are the stairs that I'm waiting for. I'll draw you in the stairs that are actually happening right now. There you go. And I'm hoping that this stair that happened right there is right here. That's why we're bottoming out here, and now it's going to go back up. So earlier today, I hosted a live stream. I host live streams every Tuesday and Thursday at 10 a.m. Eastern time, and today I asked for people's wins in their trades. The wins that came flushing through were absolutely unbelievable to see. We had one person made 100% on a swing trade, and I pulled up the trade, and yep, he followed every single rule, and he made 100% in a very short amount of time. Another person had out there day trades. They were making consistently 1% per day. And 1% doesn't sound like a lot per day, but when you annualize that over 1 year, that's a heck of a year that you're going to have day trading. Now, these are normal people like you. One of them is relatively new to the community. One has been around for quite some time, but these are people that started out in the same position as you, and quite frankly, started out in the same position as me. We all started at the same level. So don't look at this and say, oh, well, these are probably expert traders. No, they might be expert traders now, but they weren't when they started, and they really put their nose to the grindstone. They really followed the blueprint, and they followed it on a consistent basis over time. They're not just blindly following my trades. Actually, I saw some stocks in there, and I said, somebody traded IBM, and I said, IBM? I never in my mind would I ever trade IBM, but they're trading IBM. Why? Because they understand the pattern recognition. That's all that matters. They're not blindly following me, and they're keeping the blueprint simple, and that's what's giving them success. Now, what I showed you today was just a little snippet of what goes on. I made a video right here. It's a full course on everything that you need to know about trading. It's bookmarked. It's about 2.5 hours long. You can go back to certain sections that you don't understand, but you need to go watch it. Go check it out.